morning. You're watching a home broadcast of Business World Live. I'm Danny Laurel. It's 10:30 a.m. this Wednesday morning. We're about an hour into the shortened trading day. Let's kick off with our banner story. ABS-CBN went off air for the second time in its history on Tuesday night. That's May 5th. The network signed off at 7:52 p.m. shortly after the airing of its primetime newscast, TV Patrol. ABS-CBN stopped broadcast operations in compliance with the National Telecommunications Commission, or the NTC, cease and desist order after the network's 25-year congressional franchise expired on Monday, that's May the 4th. The order was immediately executory, and the shutdown covers 42 television stations, 10 digital broadcast channels, 18 FM stations, and 5 AM stations. That includes the flagship Channel 2, as well as Radio DZMM and MOR. The commission also asked ABS-CBN to explain within 10 days why the frequencies assigned to it should not be pulled out. The order, however, excludes the network's online assets such as news, entertainment, and sports websites. Its news channel ANC can also continue broadcasting, as the NTC order does not cover cable news platforms. The first time ABS-CBN was forced to go off-air was in 1972, when the Philippines was placed under martial law by the Marcos dictatorship. Over 40 years since, President Rodrigo Duterte has repeatedly lashed out at ABS-CBN, threatening to block the network's renewal of a legislative franchise. Duterte has accused ABS-CBN of refusing to air some of his 2016 presidential political ads. Meanwhile, several senators and lawmakers have slammed the NTC's order. House Committee on Legislative Franchises Chairperson Franz Alvarez said his committee will not be dictated upon by any individual or agency as to the manner, schedule, and conduct of its official business. Alvarez was apparently referring to Solicitor General Jose Calida. Alvarez said congressmen had been made aware of efforts by Calida to pressure the NTC to go against the ruling of the Department of Justice, which states that ABS-CBN may continue to broadcast while Congress deliberates on the renewal of its franchise. Now, for its part, ABS-CBN cited Senate Resolution 40, which expressed the chamber's view that the network must be allowed to continue operations pending its franchise renewal. It also took note of a House of Representatives letter to the NTC saying it should issue the network a provisional authority, the DOJ's guidelines to the commission on the matter, and an earlier statement by NTC Commissioner Gamaliel Cordoba on ABS-CBN's continued operations. ABS-CBN also said millions of Filipinos will lose their entertainment and news source, just as when people need crucial and timely information as the nation deals with the COVID-19 pandemic. ABS-CBN said it had been providing comprehensive news coverage and is working with LGUs and the private sector in providing food and basic goods for those in need. The company said it had delivered more than 300 million pesos worth of goods for at least 600,000 families during the community quarantine. Labor groups are also up in arms against this NTC order, saying 11,000 jobs are at stake. Now, taking a quick peek at my terminal here, you're going to be seeing very interestingly how the two stocks of ABS-CBN, that is, of course, the equity stock, but as well as the Philippine Depository Receipts, which allows foreigners to also invest in the media company, are now suspended. We don't have information on how long this suspension will be or whether this will be lifted anytime soon. But as it stands, these are right now suspended. But you can see one stock that is moving and definitely in a downward direction, and that is the Lopez Group. Of course, the Lopez Group owns 56% of the broadcaster. That is down by 3 9/10% today. This is the most since March. It actually opened much lower than that, hitting 6% losses and sinking deeper after it had already closed at its lowest price since the year 2009. Now, we'll be back in markets later on, but I do have other economic news that I do need to break, and that is our trade figures for the month of March. A lot of people watching out for this, especially given the fact that we were on a lockdown towards the end of March. And very surprising and not on the upside, you've got the exports at $4.531 billion. That is down year on year, 24.9%. And that is versus an estimate that was already negative at down 5%. So we were significantly worse than expected by the analysts. And you can see that on your screens here. One of the worst that we've seen on the upper left of my terminal here, down 24.9%. Let's take a quick peek at our imports here, because that was also surprising on the downside. We had hoped for a recovery in terms of imports as we try and continue our build program, but as it stands, imports for March were $6.911 billion. That's down 26.2%. Beating downwards the estimate of the analysts, which had expected a contraction of 10%. So that actually brings our deficit slightly higher than estimated. That's at negative $2.38 billion versus an estimate of analysts of $1.95 billion. Imports having fallen the most since August 2002. Exports having seen the steepest drop since 2011. This is according to Bloomberg, of course, and our Philippine electronics exports slumping by 24%. Now, one thing to be watching out for is our local currency and how that is reacting, especially to this trade news. We are weakening a touch. Actually, we are at 50.55 to the green. We're approaching back to the levels of 51, and we had already seen some strength closing in on 50. You've got Bloomberg's David Finnerty saying that apart from all of these things that we've just reported, they're also saying that the CPI, which has been down, so inflation lower than expected, leaves the door for the BSP to continue easing and cutting its rates. And he does see us to have a weaker currency in the long term. So let's take a quick peek at our index and how we are trading this morning. We saw a pretty stellar showing yesterday. We are paring back those gains. We're back to 5,600 levels, down by 1 2/10%. Yesterday, we had actually been the best performer in Asia. We were up by 1 8/10%. We reversed those losses that we had on Monday, and this on the back of some very exciting news to break here as net foreigners came back into the market. You can see that little spot of green towards the right side of my terminal here. After 33 straight days of an outflow, finally they ended that streak. This is a withdrawal that has been worth $1.71 million, an inflow rather, versus a withdrawal of $979 million we have lost just year to date. So this has been buoying our markets. And another thing to be watching out for are the water stocks this morning, or water-related stocks at least, because Chris Mangon said this is what had actually raised the bourse yesterday. That was on the back of positive comments from President Duterte towards business leaders Zobel and MVP. And he said that this general sentiment increased optimism throughout the bourse. Yesterday, we had actually seen MPIC up by 13.5%, Ayala up by 14.7%, and Manila Water up 12%. You can see some of these paring back those stellar gains as of yesterday. AC correcting and down a touch by more than 4 2/10%. Down MPIC as well, down by 1 4/10%. Manila Water, however, continuing that uptrend, up by 3 4/10%. And DMCI, which of course owns part of Maynilad, still in the green, up by 0.4%. So again, very interesting things here. But Manny Cruz of Papa Securities did mention that while it seems there's finally end of the tunnel, he does warn this will not overturn the tide when it comes to outflows. There are still a lot of reasons to be staying in cash because of the economic damage caused by the pandemic. So don't rest on our laurels here. But as it stands, as I mentioned, the local bourse correcting a touch from a big rally that we saw yesterday. Moving on to headlines we're watching this morning. The Bangko Sentral is implementing measures that will allow banks to continue providing loans for MSMEs struggling amid this pandemic. The Monetary Board gave the go signal for, quote, prudential measures to assist the MSME sector, not just now, but even in the post-crisis period. These measures include the assignment of a zero-risk weight for MSME loans. This comes as small businesses are seeking more government assistance, such as utility subsidies and lower rental rates. The Finance Department said small firms may lose up to 465 billion pesos after they temporarily halted operations or reduced their workforce during the ECQ. Almost 1 million MSMEs were recorded in 2018. That accounts to over 99% of businesses and 63% of the country's total employment. Senators say the Citira bill will have to be amended as a full-blown stimulus measure to respond to the pandemic. Recall that the Citira was already passed in the lower house last year, but was stalled in the Senate before it recessed for Easter break. That's just around the time the lockdown was also implemented. Senate President Tito Soto said after a caucus on Monday that the senators agreed to include Citira in their May 4 to June 5th agenda. We've got Senator Sonia Angara, he's the vice chairman of the Senate Ways and Means Committee, saying in a text message that debates on fiscal incentives under Citira should be settled in the upper house to eliminate investor uncertainty. Angara added that senators may have to, quote, tweak the bill given the current difficult economic environment. Meanwhile, at the lower house, Albay Representative Joey Salceda, who chairs the chamber's Ways and Means Committee, said any adjustments to the bill should include a marked preference for companies introducing proven technology. He adds that sentiment to Citira has shifted. That's due to the Balik Probinsya initiative, which proposes to provide incentives for businesses to relocate to the provinces. The government is set to prioritize health and digital infrastructure projects under the Build program. That's in light of the coronavirus crisis. NEDA said the Development Budget Coordination Committee is currently reviewing the infrastructure program to, quote, reprioritize such projects. The agency's acting director general, Carl Kendrick Chua, noted in a TV interview that the government has to give more space to health and digital infrastructure, for these are important in what he called the new normal. Chua separately told BusinessWorld that the government may also consider funding more infrastructure projects via PPPs or private-public partnerships. Chua said, though, that despite the shifting priorities, the government will forge ahead with the Build program due to its key role in the economic recovery. NEDA is confident that the government still stands a good chance of completing a lot of the program's flagship projects over the next 2.5 years. That's despite disruptions caused by the pandemic. Upskilling and digitalization have been the buzzwords during this COVID-19 pandemic, but in a rush to suddenly shift gears, how big of a concern will security actually be? Well, here to share his insights, we have with us Praveen Kumar. He's the General Manager for Asia Pacific at ASG Technologies. Good morning, Praveen, and thank you so much for joining us all the way from Singapore.
Hi, Danny. Thanks a lot for having me on this show.
Praveen, I had hosted PLDT's Tech Talk earlier on, and this was actually a question that I had on data privacy because everyone had been pushing, for the new normal, for a disruptive change right now towards digitalization. Has the issue of security been swept under the rug amid all of this rush to upskill and to make some changes? Are the companies right now doing what it takes to keep a maximum level of security?
Well, security has been one of the key drivers when people wanted to invest. That's also been a constraint in terms of how much money can I put in if there is a security issue. Data privacy has been a bigger issue that people have been more concerned in terms of what content gets shared, etc. Philippines over the past few years in terms of investments around data privacy as well as data security has been lagging around the ASEAN 5 development countries because of digital transformation. So because of a lot of companies being in the MSME space, the digital transformation journey has been a little slow, and that in turn has resulted in delays in data security and data privacy, because unless you digitally transform yourself, the needs to have implementations of data security and data privacy has not been as much of a paramount importance. So yes, there has been a big push because of COVID where everybody wants to digitally transform and move in that direction. And security has been one of the key drivers in ensuring that while you're getting digitally transformed, you don't lose transactions or content. But data privacy has taken a little bit of a back foot, which needs to be brought back as soon as COVID comes back.
Okay, how much should companies suddenly start investing? Because we're in the thick of things, and it's very difficult to see how it's going to be in the future. Can you already say at this point in time, okay, everyone suddenly needs to shift gears? You need to start rediverting funds for investments more into things like data management, data privacy, data security, and how can companies decide this?
Well, the Philippines, at least from the banking perspective or a financial perspective, the Bangko Central has made sure data privacy is a key thing that most banks should be focused on. So they ensured that each bank or each insurance company should have a data officer who's nominated and who's also kept in the bank who takes care of data security, data privacy, and related concerns. So, from an investment perspective, from the government push perspective, there has been a drive, at least in the financial sector. In the non financial sector, the digital transformation journey is so behind that if you ask a company to start investing in data privacy and data security before they digitally transform, you would not find the interest. Because as of now, because of COVID, even if we assume that by end of second quarter, Philippines comes out of COVID and most of the other world economies come out of COVID, we expect Philippines to have losses of almost 260 billion pesos. And if it goes on to the third quarter, you might have in excess of 1 trillion pesos. So the first thing that every business is thinking about is, can I digitally transform? Like take your industry, for example. Today, you're able to broadcast sitting at home, something that people could never think of in the earlier days. Today, in Philippines itself, there are a lot of BPOs where there are restricted centers where you're supposed to be operating in for customers who are based outside. Now,
Yeah.
because of travel constraints, people are forced to work from home. Same thing happening in India and other countries. So what's happening is a new normal is taking place where remote work from home, securing the environment, ensuring data, even though it's from outside a particular secure environment. How can you secure that? How can you ensure that data doesn't get leaked out? Is a concern that every company who's already digitally transformed is thinking about. So from a financial sector, I think there is a push. GDPR being globally being driven, as well as Philippines and most countries trying to push for privacy. However, is that going to be the new normal moving forward? That's a trend that we'll have to evolve and see, because most companies are thinking in that direction.
Okay, Pravina, it's an interesting point that you made there because as I noticed that during the lockdown, a lot of banks, for instance, people still needed to report to their offices because, particularly, of the privacy issue. Is this something that cannot be circumvented? It's impossible to work from home 100%. I actually had on my show Thomson Reuters, a BPO, and they were 100% working from home. Is that a possibility? And can you do that without compromising the privacy and the quality of the security? Whereas other banks, for instance, have had to have the people still reporting on the back of this.
Well, we support almost 6 of the top 10 banks in Philippines, and one of the requests that came across while COVID came in is that we were asked to nominate people who can come to the bank if needed, if there is a support requirement. And then we got that special letter that okay, who you're nominating, they can travel, etc. So your question being, can we all work from home instead of going to the office at that point of time, at least in the banking sector? I would say to a great extent because of the technology enhancements that we have, and over a period of uh, in the near future, as technology continues to evolve, this is not something we can ignore. This is a possibility that exists. However, will all banks try to enforce it, and are they ready for it? I wouldn't say so. A lot of banks are in the digital transformation journey today. A lot of the back-end applications cannot be managed sitting at home, so they would have to go physically to that particular environment. And this is an evolution that banks would tend to invest, considering what's happened today and how the banks are forced to adapt and the volume of transactions that have gone up. People didn't expect that during such a scenario, you would have a peak in workloads. Workloads have gone up dramatically. We saw a press article from one of the banks in Philippines which said that 90% of the transactions that happened were cashless online, which means the systems, the back-end infrastructure has to be capable of handling that at some point of time. And this is something people didn't expect. However, good news is most of the banks had prepared themselves for a larger capacity and hence could cater to it. However, that's one part of the story. The other part of the story is, can I do the other evolutions around fund transfers, around making sure transactions around treasury, etc., are all managed remotely without giving away privacy related issues? That's something we will evolve. They will invest, And knowing the trend, this is bound to happen.
Okay, you mentioned that you are, consulting for 6 out of 10 of the largest banks here. You can you tell us, were they prepared? Did they have the tools in place for something like this, or did this come as a major shock? And was there a lot of difficulty in terms of upskilling and changing and catering to this 90% now digital transactions? Tell us your initial sentiment on how the banks are coping with the new normal.
This was indeed surprising. We sitting in the back end have limited knowledge to the entire application landscape of a bank. We do have some knowledge in terms of how they do data, etc. But the banks are pretty particular in securing what they have and not divulge everything to every vendor that interacts with them. Most of the banks, I would say, if not all, did have the capacity to manage what the load jump that happened, the spike that happened. I would say it's a combination of things that helped them. One is the footfalls, which happens at the branches, just went down. So it went from 100 to 0. And the footfalls on the online went from 0 to 100. So effectively, if you look at how the banks have to balance what they have to do, the volume of transactions online went up, but the total number of transactions in terms of the breadth that is there, which you can do at a branch, like cash deposits, like
Mm.
making sure cash withdrawals in the branch, dramatically didn't go up as much. So I would say most of the banks had thought about capacities and how to manage the applications moving in. And I would say that all of the banks are continuously engaged in fulfilling some of the gaps that they have. The digital transformation initiative by the Banco Central enforced all banks to make sure they're digitally enabled in the next 3 months or 6 months, and they are investing. They're talking to vendors like us, calling us in remotely, doing workshops with their teams, even though their teams are home, and getting that delivery done. So they were not only in Philippines but in the region. Most banks were equipped to handle this, which we didn't know whether they were or not.
Okay, good to know. Now, Praveen, I've actually sat down with several, of these big banks actually way before the crisis and talked about their digitalization strategies. But there was a very mixed picture in terms of, some that's really their strategy to go all digital. Even some banks are, Union Bank, for example, has been very vocal about the fact that they don't want to be a bank; they want to be a technology company with financial services. So whereas others have said, no, we are continuing with the brick and mortar approach, and that is our strategy. We don't need to be a fintech company. What is the future of banking right now? Is everyone going to have to now, think less and shift their resources from brick and mortar, from these sort of traditional face-to-face services in a country that is still, as you mentioned, very cash is king sort of country? Is this period in the pandemic enough for the culture to catch up and enough for the banks to do a turnaround?
History has shown that humans tend to forget too soon, right? So otherwise, a lot of things would not get repeated in life, and that's history. It's got nothing to do with Philippines, with me, or anybody telling it. So yes, this pandemic must have ensured we invest more in healthcare, banks invest more in digital transformation, governments invest more in enforcing data privacy, data security, and regulations, etc. How things would happen in the future is very difficult for us to predict. However, what I can tell you today is at least 3 of the top 6 banks are talking to us for digital transformation of some of their core applications, which were not mobile enabled, which were not provided for their employees to work on. These are initiatives they've started during these 2 months. It's not something that they started earlier. They're also starting on their data privacy journey, where they're trying to ensure data that is brought in is more secure. You can trace data back end to end while you're collecting the documents. Also, some of the banks have started account openings online, which is very interesting. They're saying, can we try processes for customers who already have accounts with us in some form to expand their footprint without having them collect physical documents, get it officially verified, etc. So evolution is happening. Whether that would sustain is something time would tell. That said, without being digitally transformed, surviving 5 years hence is going to be absolutely impossible. It's not. So you would have to invest in brick mortar, but you'd have to do other stuff.
Okay, so final question. Given our technological limitations, it's an archipelago. A lot are saying it's more difficult here in the Philippines than it is in some countries, for example. What's your take on that in our culture as well? And also, one issue, the BSP has been very instrumental. You're right. They've done so much in terms of regulatory issues, but there's still the issue that we don't have a national ID system. It's very hard to keep track of people opening accounts, and that poses a risk as well for banks and their, especially now non-performing loans in this sort of period. What trends are you seeing that are the most important going forward? And what's your outlook on the industry? What are the tools that need to be upskilled?
So banks cannot define how humans tend to behave or interact with them. The environment defines that. So if more of the environment says, I want to go digital, the banks would have to go digital. The banks can't say I'm digital while the economy says I want to go physical and brick and mortar. What we've noticed is COVID has forced a lot of people to go digital. People who did not want to do it are forced to do it. They've learned it, and they've also started understanding the cost benefits of it. So traffic, as an example, I was speaking to a couple of MSMEs in Philippines, and they said the amount of time and money they spend in asking people to come to office and the cost involved with it is far more economical if I allow them to work from home, as an example, and make it more digital. And if I give them the facilities for that. So banks would be trending towards that because the whole economy and human culture would become more digital and more remote working, so to say, which will allow them to work and bank from home instead of going physical. So that is a trend that's going to happen because of the economy driving it, and banks would tend to adapt with it. Skills doesn't seem to be an issue. 64% of internet penetration, mobile penetration is very high in Philippines. It's just that we haven't accepted the fact that we could do cashless a lot more. That's going to change over the next few years and months.
Okay, so we're having to accept the new normal.
Yes,
right?
yes.
In our faces here. Thank you so much for those insights. That was Mr. Praveen Kumar of ASG Technologies. Thank you so much for joining us today.
Thanks a lot. Thank you. Have a good day.
Okay, guys, quick check on our markets before I let you guys go. You're going to be seeing on my terminal here how every sector is right now in the red. Take a look at that. The losses are being led by holding firms, down by 1 6/10%. Everyone from mining and oil, financials, properties, industrials, and services, all pulling back a touch. I just want to take a quick peek at our leaders and laggards here before we end the broadcast. You're going to be seeing a few bright spots. Actually, I'm counting that. Those are 6, led by Mega World, which is up by 2 3/10%. DMCI, we had mentioned that earlier on. They have some stakes in Manila, up by 1 4/10%. Security Bank as well, 2 2/5%. But you do have some laggards here. The big guns, as I mentioned earlier, holding firms still taking a brunt of that. AEV in particular, down by 4 2/10%. But you've also got the ones that had rallied significantly yesterday, MPIC, which by the way is releasing its earnings later on in the afternoon, but Ayala Corp also down by 3 9/10% after having seen a double-digit rally earlier on today. As per our index, we are trading at 56.09, down and sideways throughout the first couple of hours of trade, sideways and down by 1 1/10%. That's a first look into the business day. Today is May 6, 2020. Thank you so much for watching. Catch us again 10:30 tomorrow. I'm Danny Laurel, and we are One News.